Well, as promised, Raamdeo Agrawal, co-founder of Motilal Oswal Securities, is with us to discuss so many issues that are plaguing investors' minds and the markets. Raamdeo, good morning. Thank you very much for joining us in the studio. Well, let me start with the positives.
Yes.
There seems to be a lot of de-escalation calls from across the world.
Yes.
And of course, the two countries have also made statements that they will not escalate the tension. Plus, there is a positivity in the sense many people have interpreted, as Anuj was saying, the Satta market has interpreted, that this strengthens the chances of the ruling party. So, do you feel positive now, positive enough to expect the index will go above 11,000?
I mean, I will say no. I mean, it doesn't feel that kind of thing. But right now the biggest event, apart from what we are going through geopolitical, the next big event is election. So, so both sides things are changing. Here, whatever actions we are saying, that is having direct impact on the possibility of polarized voting, one way or other. I mean, right now it looks as if, you know, the current government will come with a bigger majority. You know, that's the wish of a lot of people, particularly people who come here. They have those wishes. So, but then voters are not. Voters don't come to the mass. Voters don't come to
the studio.
Okay, so what finally will happen that time will have a huge impact. And market is, you know, because it's still 60-70 days. So market is kind of a very calibrated in terms of taking that huge stance one way or other. There is a good probability that the outcome might be favorable, but it is not 100%. Say, might be 60%, 65%. So as the time comes closer and this probability starts going higher, that okay, 70%, 75%, and the outcome is looking more certain, then market will take that final stance.
Fair enough. Raamdeo, good morning. You know, the price action sometimes speaks a lot. We saw the market was very narrow in January. That continued in February. Over the last 2 weeks, the mid caps have started to outperform. Good quality stocks are finding bottom. They're seeing buying. Now, some part of that was short covering, but there's some genuine delivery based buying which is happening as well. In that, are you getting a sense that the worst for the broader market may be priced in, especially considering we had a very rough last year as well?
Some stocks for sure. I mean, wherever sell-off happened unnaturally, say like Z. You know, I mean, those kind of stocks where the company itself is absolutely fine, and there was something external about the stock pledge and those kind of things. So the whole thing recovered very quickly. So those kind of things are happening sporadically in some counters. But one of my understanding or what I have seen in last 1.5 to 2 years while managing mutual fund is that when the domestic money comes, it comes in very distributed mid cap, small cap funds and a lot of PMSs, you know, small PMSs, and that money actually chases a lot of mid and small cap companies. Now that flow is definitely negative, and it is becoming worse by the day.
Okay.
So that till that reverses, I don't think generalized good time for mid and small cap. But individually a company, if something is hammered down to, you know, much more naturally level, then of course it can come up on its own fundamental.
Absolutely. I mean, stocks like Dish TV and even Z Entertainment, they've been the stocks of the month. The kind of rise 60% up on on Dish Entertainment, Dish TV and Z Entertainment in the month of February. Raamdeo, good morning. So this, however, would be a great time for you know, fund managers and people like yourselves, like who love looking at stocks and like to buy things at good value. So the question is now value, but with some idea of growth. For instance, you know, a stock like Ashok Leyland, people were always hesitant. It was beaten down to pulp, yet buyers weren't coming in because there was a question mark on growth. A stock like Page Industries, I mean, from 70 times to now, I think almost 50 times, but still question marks on growth. So value, but with growth visibility. Where do you see this in the market?
So, you know, the running theme all across is buy growth at reasonable price. We say quality and growth at reasonable price, which becomes even more difficult to find. You know, growth at reasonable prices, you can say you can compromise on quality, but I'll buy growth, but I'll pay reasonable price. But when I say I want top quality and growth and reasonable price, so then you're pushing your luck too hard. And
but you do that all the time. QGLP क्या होता है?
वो होता है वही है, लेकिन the issue is that you tend to underperform, because what Buffett said in this letter, that a great company if you pay too high a price, it becomes a very bad investment or subnormal investment for prolonged period. Finally, the economics of the business and economics of investment will converge. But who has that much time, 3-4 years of return holiday or subnormal return, and then you make whatever high returns you.
But are you getting enough ideas in the 3 filters that you just mentioned? These are tough filters. I mean, you have to have quality, value and growth.
Yeah, so life is easier because there is no net flow. So now we have to only optimize what money we have. So to that extent it becomes much better. Every day if you have 100 crores coming, then you have to not only buy the same stock, or you have to find new ideas. Today if the money flow is net zero or negative, your job is because market is also slowly sinking, for a lot of stocks. So you know where exactly you want to put.
So where would your churn be then? I mean, you've been a person with who had placed a lot of bets on Eicher, placed a lot of bets on Maruti. These have been your marquee stocks. Would you want to churn, because that's where we saw contraction, slowdown?
वो तो हो गया ना. So I mean, we should have churned at the top, not at the bottom. So, see, there are 2 issues, Lata. I mean, one is the franchise, and second is the growth.
Yes.
Okay.
Yes.
So, franchise is intact. Monopoly of, I mean, both the companies on their own segments are intact. So, profitability of the business is not in doubt. But no business goes in a straight line at 40% compounded or 30% compounded. So, every business after 2 or 3 years of growth, it takes a breather. But market doesn't know how long this breathing is going to continue. Is it going to be 1 year? Is it going to be 2 quarters? Or is it going to be forever? That is your call as an investor, whether you want to sit there or move on.
Okay. Raamdeo, perhaps slightly tough one for you to answer because you are in same business in NBFCs. The likes of Motilal Oswal, for example. I mean, of course, you won't talk about that stock, but Edelweiss, IIFL, we saw great wealth creation, and now we've seen fair bit of price damage. Your thoughts on what's happening here? Of course, the likes of Bajaj Finance have bounced back very sharply, but Shriram Transport as well has bounced back. But overall, how do you look at this space now?
See, I can talk about my company to some extent, because we have designed our company in particular way. I mean, every company is designed very differently, though you can club it IIFL, Edelweiss, Motilal Oswal, these 3 capital market companies, and if you do the chart, I mean, they literally go in the same direction. But these 2 are all the companies, actually every company is very different, and it depends on the design of the company. So we can talk a little bit more about Motilal Oswal, because that's where I sit and kind of do things. So here, see, it is a cyclical company. You cannot undermine cyclicality of the underlying business. Say like we have a very large portion of almost 50-60% depending on the time. You have the broking business. So broking business is very market dependent, what's happening in the marketplace. Then you have the AMC, which is now much newer, but that is about 20-30% of the profit. So that is very stable, very high quality. But broking remains underlying, fluctuating. Then we try to build Aspire, which is
which was a mistake.
No, not mistake. See, it takes time to build. You guys are in hurry, or outsiders are in hurry. But for jitna time lag, see, in broking I started in 87. Till 90 I didn't know whether I exist or not. It took 5 years for us to wait for the first bull run. When we took the AMC license in 2008, 2014, 2016 we broke even. It took 10 years, 8-9 years to break even. So everything takes that learning period. So we are paying our tuition. See, when you are building large business, your tuition fee is also large. So we are paying that. We are going through that process. I think, I would say 60-70% of learning is done. Yet that 1/3 is still left. We are coming on top of it. I'm quite sure that next year, as we have projected, it will be far better than what it was in last year. But suddenly you will not become blue chip in that particular segment.
I agree. Since you're talking, willing to talk about your company, your thoughts on this recent SEBI order as well, Raamdeo?
Yeah, so that I don't want to talk, because थोड़ा sensitive and it makes me sad to see the order. But I mean, whenever you meet Motilal ji, or we've decided that Motilal ji talk, because actually I have not followed this in person. So it remains well communicated if one person talks about it. But doesn't make me happy.
So let's talk about some of the things that you've really closely followed. Big investments. I don't know if positions on the oil marketing space for you continue to be where they were. Because what we saw play out last week was an interesting dichotomy. When crude was moving to 67, all these stocks were actually rallying because people said, no, let's focus on inventory gains. And now they have pricing freedom. I mean, so the market sentiment also changes very quickly on a dime. Suddenly the worry was not there about the pump prices. Your own thoughts on this space and whether you are still comfortable holding those kind of positions?
Yeah. See, you buy stocks based on certain your own assumption or dream or what vision you have about the stock. So the thing was that after so many, one is that it's a very large business, the largest business of India. Second, it is monopolistic. These three companies, they are literally monopoly on 92% share on the other thing, and it's a 24/7, 365 days business. It's the ultimate retail, if you could talk it. So, and I mean, making 2% profit on their sales is not too much to ask for. From crude to 1 liter in Mathura at the middle of the night, you got to make 2-3% net profit. So, and government said you can make that reasonable amount of profit. So we were saying that the reasonable amount of profit is possible, and government erred in their policy between 2003 and 2013. Now they will never commit that mistake, and hence we have a reason to buy at 5-6p multiple, a damn good business, 25-30% payout. So 5-6-7% dividend yield and 5-6% the same is 6-7%, 8% volume growth, which has been the trend. But I mean, all kinds of conduct by the government in terms of buying, selling, hammering at any price. I mean, the stock is available from LIC, or so I think those things distorted the, and that 1 rupee thing. I mean, the government's that was the last thing in the, so they played in the hands of speculators. So this entire 12 months, 18 months has been quite trying to hold the stock and suffer. I mean, I think our schemes have suffered maximum because of having a good chunk of that in the portfolio. So we must have lost 4-5% of the performance because of that. But that's the kind of price you pay for a very focused allocation and your conviction on the
focused allocation. You know, I wanted to ask you about that. Your allocations largely have been the auto stocks, your Aisha Maruti. You have a little bit of TCS Infosys, and then you have private banks largely. Will you move out of this now?
Why should we move out?
No, I'm asking you. Is there a fourth sector that you are looking at?
See, I mean, whenever ideas come,
I'm not telling you, I'm asking.
Just say like software looked at some point of time nice. We included Infosys, TCS again.
No, like cement. So I don't know whether you would look at something.
It's not looking that attractive to us, but we are open to. See, it's a public money, and we are only what you call determinations to make money for them. Okay,
yes, of course.
Wherever we think time has come for us to jump in and the prospects are not discounted by the market, we'll definitely jump in.
Autos, you remain as convinced as ever despite all this gloom and doom talk as if people will not buy bikes and cars now in the country.
So, no, let it come a little more down. We'll buy some more.
Okay.
You know, one more question. This whole IT theme, Infosys and TCS, you played both the stocks, of course. In between, there's a bit of a race. Now, for large cap IT in particular, how do you think things are looking? And TCS has corrected quite a bit from its highs, though moving up once again.
I mean, we remain positive. I mean, the sector is, see, this is the India's best possible industry. I mean, the opportunity for Indians in a full employment situation, for the US economy, and the kind of things we can do, the size of the contracts we can take, and the competency TCS and Infosys have in the world order. We think that, and they are not hugely expensive companies. They have a huge free cash flow. The return on equity looks to be 25-30% because they have the large amount of treasury. So in fact, my request is that they should become far more aggressive in payouts, so that balance sheet becomes leaner and they can buy back their shares, and so those kind of things are possible. So they will create value if the management is strong enough to grow and snatch market share from the global peers.
A final word on the debt markets as you see them. That's where the worry came from. But markets are usually, I mean, I would assume equity markets have you know, a very close relation with the debt markets, and they know the problem. Is it discounted, or is it still worrying that that might be the spot where a downfall may come?
See, you don't have to have downfall. I mean, what happens is that things don't move up. You know, because
inflows are not coming.
One is that I don't understand debt market, but no economy can function well unless your credit markets function very smoothly. So we have very, you know, like government is trying very hard. They've removed so many banks from the PCA.
Yes.
They are trying to help NBFCs. But the way it was functioning, say 6 months back, was there was a segment of PSU banks. They're playing their own role, maintenance or whatever, but not growing so much. Then you had a private sector banks which were taking bulk of the growth on their side, and it was shared with NBFCs. Now, this third leg is kind of stumbling. So, what do you do with that? So, one is to repair that particular segment itself, or it finds a newer way of doing it.
Yes.
Say they buy new, they find new owners and then recap and move on in life. But right now it looks like they are limping.
Okay.
Or you can't get growth from there. So the new banks which are coming out of PCA, at some point of time, credit flow will start from them and they'll make up for what deficiency is here. But right now, NBFCs, your automotive companies, even the builders, HFCs and all. See, if you want to buy a home of 1 crore, 30 lakhs he has given to the builder, but 70 lakhs has to come from the mortgage company, and that check is sanctioned is there, but check is not coming through. So how do you
Yeah.
Let us hope. Yeah.
Just one last question.
We're out of time.
Because you have created some 100 baggers. Like, of course, from the time they were unlisted, the AU name comes to mind. RBL Bank is something that you have backed. What's the next big opportunity, Raamdeo?
No. See, you just keep watching. I mean, as the market goes down, more and more opportunities will come. See, actually, the big bullish thing is that as the market goes down, we should become far more bullish. Because stocks in 4 years' time or 5 years' time will go where it has to go. But if my purchase price can be 30, 40, 50% cheaper, that much more bagging can happen. So, I mean, the weak market doesn't scare us. At least it doesn't scare me. But smooth functioning of businesses is most important. So if there is any obstruction to smooth functioning of business, and that too for prolonged period, that kind of clouds the mind.
Okay. Well, we will have to see. Let us hope that the NBFC problem is smoothening out, but that's a question still unanswered. Thank you very much, Raamdeo. It's always a pleasure having you with us in the studio. We wrap up on Bazaar. Trading ideas coming up for you on Chartbusters.